Boom. We are alive, ladies and gentlemen. This is Tio in the Arcane Bear. We hope you're having a good time. The bull market, what a wild ride. You know, a big part of what we want to always go over is assessing the macro perspective and really kind of understanding where we are in this story. Now, so I'm going to dive in. We're going to take a look at Bitcoin, Ethereum. We're going to go over a lot of the other alternative tokens as well. And we'll make today like an extra long stream for everybody because it's been a while. And we're going to go over and we'll try to answer as many of your guys' thoughts and questions about this process. So if you're in the private group, you will have got some updates already about the potential of this being a distribution over the last week. And we've talked about this many times before, but with that in mind, what we're going to do is we're just going to fire our way over to Bitcoin on the 4-hour chart, and boom, there it is. Okay. So this is Bitcoin on the 4-hour, and here is the current trading range. Now, currently, we've been following this trading range just up until the other day as a reaccumulation, because first off, our bias is still bullish, ultimately. And when we got to phase C here, at the top of the upthrust, there was no supply signature that gave us any worrying figures, right? And normally, what happens, and what you want to kind of keep an eye on, is this phase C volume and supply signature. Now, because of that, I don't actually think the bull market is over. We just don't see the supply signature that's characteristic of that. Now, with Ethereum, on the other hand, we could make an argument against it, and we'll go over that. But for now, let's just focus and stay kind of up to date with Bitcoin. So here, phase C, which is where reaccumulation can very quickly turn into distribution, where you come down like this, you maybe see you can't get above, you have a major sign of weakness, and then you break below 46, where you couldn't get above 49,000, and you come back lower. So here's the key points. I took out a few Bitcoin and Ethereum worth of profit around the $54,000 mark for Bitcoin and around the $2,400 mark for Ethereum, just to, it's a common strategy of mine. I've been in this market for a while. I like to take out around 3 to 5 years of operating capital for my business at any given moment in the middle of a bull market, just to make sure no matter what happens, we can continue to operate. But let's go over some of the fun parts here. So as we zoom in a little bit on the 4-hour, we can see that even though there was not a massive supply test, and this is kind of the kicker, right, guys, is that this upthrust here, this moment, had no massive supply signatures come in. It wasn't until we started to drop that we did see this big supply signature come in, and we started to drop. Now, we've currently found local support here, and it looks like we're probably going to come back to try to retest the $54,000 area. So these are some pretty pivotal moments for Bitcoin. We usually have these automatic reactions after a big drop like that, and it usually will bring us back up to the top of our trading range. So if you haven't yet, and you've been in the bull market for quite some time, let's say you entered with us around the $6,000 area, you can go back and watch all of our videos at that point. This gap here in the VPVR, it looks like that's probably what we're going to try to fill. If we can't get above 54,000, we will come back down lower, probably to 44,000. And then again, if we cannot get back above 47,000, we will probably come down to 30,000. And we've gone over this a few times, actually. Many times we've talked about how one of the most confusing parts about reaccumulation is right at phase C. When you get into these potentials of a break above the box, it can instantly switch. And that's why I took some profits the other day, just because I'm not confident that we're not seeing an intermediary kind of breakdown in the market. So here's what I suspect will happen, and it leads to an intermediary distributional moment, right? So on this 4-hour chart, in this particular trading range, let's say we've got our upthrust into distribution, which we saw here. That clear volume signature for the distribution was noticeable. Here's your supply signature, equal to that of the shakeout primarily. And as we come down, again, we're going to be looking for the inability to close above, let's say, $57,000. So that's really key. We need to get above $57,000. Otherwise, we will come back down to 44. And if we cannot get back above 48, 49, we will come down to $30,000 to retest this area. Now, I actually think that this is a good thing. I think that coming back down here to retest this area of where Tesla kind of bought is an important function. And I can show an analog to where I think that we've seen this before. So if you go back to our videos for Bitcoin, in August. Yeah, back in August, we were following kind of a reaccumulation after decline. So here are our older trading ranges. Let's imagine, just for kind of, again, this is an analog type of mentality here. Let's imagine that right now this was the $60,000 area. We hit 60,000. We came down to 40,000. We might jump back up, try to get to 57, and if we can't get there, we'll close back down to 30,000. Even if we do that, I suspect what we're going to see is just another longer reaccumulation between that $30,000 mark. So this is not I do not think that this is a full scale distribution, like end of the bull market pattern. I just don't see those signals. And again, we would recognize those by the extraordinarily high amount of supply coming in the upthrust. And it didn't. It came from the distribution. We saw a large amount of supply come in after the distribution, but not in the upthrust. So this entire area here is where you would normally see that significant amount of supply come onto the market that we're just not seeing right now. And if we saw that, I would be much more worried about let's say about a longer term bear market. This area down here between April 9th and April 13th, when we were rising, we didn't see a massive amount of supply come in until we started to go down. And it's normally on the upside that you would be a little bit disconcerted. Now, this brings us to Ethereum. Now, I'm currently on the 5-minute on Ethereum. I don't know what I'm doing there, just watching the turnaround, I guess. This is where Ethereum starts to look a little potentially worrying. So on the first movement up here, when we made our videos, I don't remember what day, it was just a few days ago. We were looking at this area here and I'm like, guys, this doesn't look like distribution yet because we just don't see the supply signature coming in. But as we started to rise up this second movement here, this is where the supply signature starts to look worrying. You have a peak out top with a massive amount of supply coming in that whole time. And this to me looks like kind of a finality of a bull market. Yeah, you guys can see the screen. I don't know what you're talking about. Oh, you can't see the full screen. Oh, some of the volume signature is a little cut off. Let's see here. Can I? Oh, yeah, okay. I must have been playing around with it the other day from, let's see here. Sorry about that, Bear family. Hopefully that's better. Thank you for the heads up on that. Okay, how about now? I was trying to set it up on my other computer. Sad to hear that didn't work out great. Hopefully that's better now. Okay, so here we are we're re-looking at the supply signature. Again, if you notice the supply signature at the bottom for Ethereum here, very, very high in comparison with this. So this looks like an upthrust and a distributional moment to me for Ethereum. This kind of supply signature is worrying to me. But we've had a big reaction and a big rally from Ethereum both times we hit that $1,800 mark. So we're in a little bit of a confusing spot right now. Everything kind of looks like it's in a semi-distributional pattern. We saw huge floors drop out here. And Ethereum's recovery was beautiful. As Bitcoin was going down, Ethereum was going up. But look how quickly it retraced all of those gains. And more importantly, again, that supply signature down here is the part that's really significant for us, where we're like, okay, this might be an upthrust and then the distribution, because there is that rising supply signature into that particular moment. And as we go further and further out in the time frames to the daily, you can see very clearly what I have been talking about in all of our previous videos, which is that normally these upthrust moments where phase C starts to break down is when you have the primary shakeout, which is over here, equal supply in phase C, and that's what we're seeing now, and that's what's worrying. And that's one of the reasons why I took some profits, just because of this supply signature here. Again, I'm in the market for the next 10 to 20 years. You really have to adjust your strategy for where you are in your particular life, because everyone is different. And if you're new to the market, guys, don't fucking play with leverage. Ignore any YouTuber who tells you to play with leverage unless you know exactly what you're doing. And if they're not using FTX, it's probably even a bigger sign that they don't really know what they're doing. But that's a different story. Okay, so here we're actually in a rising wedge right now, and this is usually a bearish pattern. So normally a rising wedge will go to the top, it won't be able to break out, and then it will come back down really hard. So I'm keeping a really close eye on Ethereum right now too, because it's very likely that with this particular distributional supply coming in here, I don't trust that Ethereum is just going to continue to go higher. Now, this is not always the case, and this is one of the fun things, is ultimately what we're trying to do is measure the market in its entirety, not in these single individual daily moves, right? So if you go back, you watch all of our videos back since March, April, May, June, July, August, you will recognize we are taking most of our positions way down here when it was a much healthier, much easier place to do it. Actually well below 380, but yeah, there we go. There's the rest of the year pretty much. This area here is where we made most of our early entries. So taking profits here was really easy for me. And also because I've said many times, I don't try to call the exact top of the bull market. This is basically close enough for me to take out the profits, cover my next 3 to 5 years of business structure, and then move forward. Are we going to see an invalidation of this? It's possible, you know, and again, this is one of the interesting parts here. Do I think that's highly likely at the moment? Probably not. It seemed like we're going to see a market breather. And if we take that analog of what I was kind of potentially thinking for Bitcoin, is that we come back down, we have a reaccumulation after decline type moment, very similar to what we saw in the beginning of last year, where we have this big blow up top, rounded bottom. It comes back down, hits like 32,000, has a reaccumulation, and then just goes way higher. Seems very likely to me at this moment. So again, we'll probably see an automatic reaction on Bitcoin up to around 5,600. We'll come back down to 44,000. We'll try to test this area. And then if we can't, we will break lower. If by chance we do get above the $56,255 mark and we close above that on a significant 6 hour to daily candle, kaboom, we will see it continue to rise. And again, here's the tricky part. In phase C, we did not see that enormous amount of supply come in here until after the downside. And that takes us to our next kind of moment of conjecture. So let's actually give you my face back here because I want to click on this, go back to this, and we want to go over this. Okay, so here is the Bitcoin stock to flow model. Currently, based off the average daily cost to mine a Bitcoin is actually undervalued at this particular price. As you can see, we have fallen below the stock to flow model. If we go back to 2016, 2017, you can see we actually ran below the cost of Bitcoin almost the entire way through until the very last minute when we got up to the price of Bitcoin and then broke through dramatically. So we have been keeping pace with the stock to flow model really well, actually. We've been click right into that price tag. So this idea that we come back down and then jump right back up to 80 to 90,000 is the most likely situation. So I am in no way bearish. I have a temporary downside in my view right now where we go 57, 45, 47, down to 32, reaccumulate 32 to 43, and then just go absolutely ballistic. And again, the analog, the closest time we've seen something very similar to that was right at the start of the bull market, where you saw this, what is very clearly a rounded top distributional pattern, right? And you can pretend that this is like the $60,000 top right here. And then we break down and we come down around 30 grand and then we reaccumulate before we see a much bigger move up. But just by everything that we're looking at, this bull market is not done. This is a temporary change of character, not a full scale, wholesale price of Bitcoin. And we're going to go over a few other metrics to just kind of fare that out. So another way to look at this is the stock to flow deflection model. So this is showing us when the price of Bitcoin actually exceeds the cost of mining, and the Bitcoin is overvalued. So when we were at $40,000, it was overvalued and very quickly it got sold back down. When it was overvalued, it got sold back down. And here we've actually been running under the price of mining frequently. And we've actually been decreasing in the cost of Bitcoin on the open market to what it's actually worth from the miners today. So here we can see all the way back to 2017 and 2018, where in 2017 we clear out 3.4x higher the cost of Bitcoin on the nominal value through the stock to flow model, again, which is just an easy way to say the cost of mining Bitcoin effectively, or it's like a convoluted way to say it, maybe is a better way. Then you can see every time we've been in the green here, the stock to flow model represents a place where the Bitcoin at the current prices are lower than what it costs to produce. Anything in the green here, which is generally below the $6,000 mark. But here, now that we've gotten in past October, we could see a further decline in that somewhere close to the 0.5. We've seen consistent returns to the 0.5 stock to flow deflection. So I bet that's what we'll see, a quick return to 0.5, and then we're going to turn the fuck around and we're going to rip people's faces off. So don't get scared here. You know, this represents another time for entering. I bought more Bitcoin today, yay, and I'll buy more Bitcoin as it goes down too. My monthly entries here are staying consistent, even though I did take profit. Just a habit of mine, and we're up already 10x basically. So I was like, fuck it, that's close enough. Okay, so Ethereum we went over. It looks like we're getting this rising wedge. We may even see the completion of this and the breakdown of it here. Declining supply, rising price. Interesting. We're going to know here in the next probably hour, so it depends on how long we stay on. So here, Avalanche took a freaking beating. It looked like we were going to get a nice breakout, and then bam, slammed right back down 33%. This is also why you should not be playing with leverage unless you know exactly what you're doing, and it really can afford to play like that. If you're new, don't even think about touching leverage. If anyone who tries to sell you on leverage when you're new is a fucking scammer, as far as I'm concerned. Because they're lying to you about your probability of getting these trades right. And the last thing we want you to do is lose money in a bull market when it's extraordinarily easy to make money here. So I'm going to add more to my Avalanche trade. Serum as well, right back down to the bottom of the trading range. And here's one of the interesting parts. We're seeing a lot of the strength at the bottom of the trading range for some of these guys. So we'll go through a bunch of our alternative holds right now. We'll look a little closer on the Serum here just for fun, because we are seeing a break above the falling wedge and holding above the $5.6 area. So a big part of the question is going to be, do we see any other continued strength here? Because yesterday, when Ethereum was going for a rip, we had almost a 50% uptick on the Serum before it was totally erased right back down to this local bottom here, where we see boop, 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 all these bottoms, and through this falling wedge, which we're currently closing above. So we're kind of right in the middle, like almost if you flipped a coin and the coin landed on its fucking edge. And you're like, well, it's not a heads or a tails yet, so I don't want to get too excited. But again, primarily speaking, if we're using Bitcoin as our northern light, which is what we like to do here, we can see that Bitcoin is undervalued based off what it costs to mine it today by a significant amount. These are usually the lowest drops we see, around 0.5. Like if you take the stock to flow deflection model, on average, this is where we go, around the 0.5, 0.75 mark every time we've dipped down. Whether it's been the drop to 3,000 or any of the other drops, this is usually kind of where we bottom out on the stock to flow deflection model. So I think that this is just temporary. I'm not exiting my large positions. I just covered my basis for the next. Anyways, that's been my consistent strategy over the last 5 years. So we look at other things like band is another great example, shoved right back down to the bottom of our widening wedge, but still showing some strength here. We go to M stable again, broken right down, right below the bottom here as well of our megaphone pattern, and showing some strength here as well. Now Solana has been fantastic. Easily the top performer of my portfolio in terms of percentage gain the last week. This is where the dip in Bitcoin happened, and you saw a dramatic price increase of 100% on Solana, which is great. So shout out to everyone who was in that trade. And we still see strength. Now, again, this is where things get a little confusing, is because there's an enormous amount of supply coming into the market to make that happen. And even now, big chunks of supply, very little price spread. So it's strong now, but it could change in the blink of an eye. Even FTT fell below its kind of rising gradient channel here, has dipped in to around $42, and we're just kind of in a waiting game to see if we see a lot of these start to hold back above. It could shift the sentiment, and this is one of the unique things about this bull market versus our other ones, is that there are very real blue chip players in here that is not Bitcoin, and I feel sorry for the maximalists who have not yet understood that. But for all of you that are open-minded, there's a lot of potential here still. So I'm not concerned in any way. Don't play with leverage unless you're a gangster, ladies and gentlemen. I saw a few of you guys make posts on my Twitter, like, oh my God, I lost money using leverage. Don't use leverage unless you're a professional. And if you have to ask someone whether they think you're a professional or not, clearly you are not. So just be wary. It's really easy to make money in the bull market by just being in the market. Don't make it more stressful on yourself by being in a leverage position. Synthetics, again, things were looking really good. It looked like we were going to get a nice breakout pattern on a lot of these. We couldn't get back above, and bam, right back to the bottom of the trading range for synthetics as well. Same with Balancer, right back to the bottom of the trading range. 1 inch right to the bottom of the trading range. So we haven't totally broken down. Now, GRT, for example, has definitely started to break down way below its trading range. And there are a few like that. Now, our Cardano, another example where here we have to ask ourselves, look at the supply that came in here in this upthrust. This is usually an indicator that the market bull is over. But again, we can clearly imagine that we'll see something similar to what we saw in Bitcoin. A big distributional pattern, drops back down, has another reaccumulation, and then continues upwards. And that's really what I think we're going to see. I think we're going to see a repeat of what we did way back in August, where we have this, here, let's take it like this, right? Here's all this up. Here's our spring in March. We shoot up, and then we have this intermediary distributional moment. This was clearly a distributional trading range. We drop back down, but very, very quickly turn the fuck around. So I think that this right here, this movement is what we're going to witness before we continue higher. And it might take a month or two. So there's no rush here. We're going to know over the next week or two what it does. So keep that in mind. There's no rush. And for those of you that are learning how to do all this, just be patient. Think about the next 10 to 20 years ahead of you and how successful you'll be if you follow some of these simple strategies. The DeFi perpetuals. Okay, so again, here's the nice thing is what I believe to be our primary SOS is not showing distribution in the volume signature. It definitely is on the downside, but that's not a big deal. And we see decreasing sale on the downside too, with what appears to be decreasing volatility. So there are a few indicators here to show that even if not all things are going to be bullish right now, there are likely a few that will just continue on their own fucking merry way, because this bull market is not just about Bitcoin anymore. There are new technologies that make Bitcoin more valuable. Ethereum is one of those. So that's kind of my insight, my updates for today. Hope that's helpful for you guys. I do not think it's a full-scale distributional pattern like we've seen at the end of the bull market. Just what I get from the supply signature. We've been studying this stuff for a decent while now. So what I'm going to do now is I'm going to jump over into the chat and we'll take a look at a few of your guys' thoughts and questions. And in the meantime, what we'll probably do is just open up Bitcoin on the daily here. That way we can go back to what we've been watching for the last year. So this is the chart we've drawn up for the last year. We've broken well above our regression lines. And it looks like we may come back down to test this regression line. And again, that's around $44,000 to $32,000 pretty easily. So we'll have to keep an eye on that. But nonetheless, this is what full-scale distribution looks like. And we don't have that yet either. Like, mind you, here's another way to look at it. Look at the supply signature at the top of the bull market here, extraordinarily high. Like if I draw this supply signature and take it across, the only time we have seen supply come in that's that large was at the spring and at that first shakeout. And even then it wasn't close. So I don't think that the bull market is over. This is a temporary distributional pattern. It is not a full distributional pattern like we've seen in the past here. Be wary of people that pretend to know what they're talking about. Look, just to be clear, I don't always know everything. I clearly make mistakes. I try to adjust with that and let you guys know as we're growing and learning here, but this does not look like the bull market is over to me. Okay, so let's take a look at a few of your guys' thoughts and questions. I'll grab my my iPad here, drag it over here. Maybe it'll make it a little easier to see your guys' thoughts. Let's keep an eye on Ethereum here. Okay. The Vitamin Dean show says, been searching for my top crypto channels, and I think Arcane Bear is one of them. Oh, thank you for that. I appreciate it. I'm always learning and growing with you guys, so it's great to be able to go. Uni Tribe says, what's your prediction for the weekend? I do not make predictions. You should study Nassim Taleb, and then you'll understand more about why I'm talking about. Let's see. Crypto Mayor says, hello, I found a bugged BTC exchange. Okay, whatever. Oh, some of these guys are just, the crypto scammers are rife right now. I need my my admins to get rid of some of these people. I'll do it myself. Yeah, 1 inch, the volume doesn't look great. On a lot of these right now, the supply signature doesn't look great. A little, yeah, we're still waiting to see. But yeah, things don't, there's a few where they really clearly, the supply signature is much higher than you'd want in phase C. Leave My Gun says, will Bitcoin drop to 43K? We went over that in the earlier part of the video. Kevin Allen says, definitely got a sub for me. Happy for the support. Remember to give us a thumbs up if you like this content, guys. If you're new to the channel, please subscribe and follow us on any of the other social media channels as well. Helps support the Arcane Bear. Did you see the Pi cycle 2 was the top of Bitcoin? Those are temporary. Any cycle indicator moves forward in a logarithmic fashion. So what's the top today is not the top tomorrow, if that makes sense. So I agree, but also yet disagree. This is a temporary distribution pattern in my moment. Spiral Crunch says, my first time with skin in the game, I'm down 20%. So Spiral, here's a great thing to think. Don't even worry about your skin in the game plays yet. You want to focus on the longer term. So I wouldn't even think about how much you're up or down in percentages. Just think about how many assets you hold and ignore the dollar price. Peter says, I enjoy your shows, Arcane Bear. I really like your straight no bull talk. Well, sometimes we talk bull, sometimes we talk bear. What do you think of EOS? Don't think much about it. It's not on my channel, not in my portfolio. Matthias says, thank you for the great insights. Happy to share, you guys. I really, really love doing these videos. What do you think of Theta? So we'll take a quick look at Theta. And again, we are seeing the start of distributional patterns in some of these. And again, I think that they're temporary. How low we go on some of these is really going to be interdependent upon the supply signatures that we see over the next 48 hours. So we'll go through, we'll open up Theta on the chart here. Yeah, okay, so see Theta here. Theta has the supply signature that I do not like, that this is like, okay, this is clearly a distribution. This is like a perfect distributional pattern. Look at this wick. Look at that supply signature. This is what a phase C looks like, plain as day. A break below the trading range, couldn't get back above, and then a breakdown. And then again here, what you have to remember is we could see a reaccumulation pattern take place right here. We don't know how big these distribution patterns are yet, so we're going to want to keep an eye on it. You can have redistribution each kind of step along the way. So this is kind of, Theta is a perfect textbook, what looks like a reaccumulation, and then this part here, all that supply signature being equal to that of your shakeout, that's a fail. And that's what I don't like to see. And that's what Bitcoin didn't have yet. So we'll keep an eye on that. But again, at any point you could see these things recover. We're still, I think we're right in the middle of the bull market. So I'm not going to make too much conjecture until we get some serious confirms. If Michael says, if Bitcoin drops to 30K, what kind of response do you see happening to the alts? A lot of them will go down to, what would it be a bad idea to withdraw a percentage of my portfolio? I don't know, do whatever the fuck you want. Like I said, it depends when you entered, it depends how long term your thoughts are. You know, if you're down, if you're in the negative, definitely don't lose money by closing a trade. But yeah, that's a personal question. I have no idea. We already went over Solana, Martin. I'm a big fan of Solana. Why are you looking at charts and perpetual futures? Why not something else? I love perpetual futures. There's a huge amount of supply that goes in on the futures charts. It's also why people often look at the fundamentals. We already went over Avalanche as well. And I have no idea what Chili's is. Doge is randomness personified. Yeah, we've kind of gone over the reason why I own Doge in my portfolio. I do think it is important to signal to at least myself that I don't know everything. So let's take limited bets. And I think this is very well expressed in the book Dan Dao, which is heads I win, tails I only lose a little. And that's, I think, the best way to look at any bet is heads I win, tails I only lose a little. So repeat that to yourself and to understand what the hell it means on a practical basis. Rico says, what do you think dumped Bitcoin? It's just a lack of demand. That's what did it. And as we've gone over too here, when we look at our percentage balance, we did see a big chunk of supply come into the markets in the last 48 hours. So here we've been watching, here we see April 15th, big price drop, all of it got chewed up and got taken off, and then a big chunk of the supply came right back into the market through that fall. Although I do suspect that has a lot to do with retail, kind of weaker hands. We are still on an overall downtrend. If we start to go up and up and up on the percent balance stack, that's a totally different story, but that's not what we're seeing right now. Currently, we're still in a full-scale downtrend for the amount of liquidity on the exchange. But also remember, guys, that as liquidity leaves the market, what we end up getting is more volatility, not less. And it's in either direction. So that means the price goes up and down with more volatility when supply leaves the market. And that is hyper important to recognize. And then again, this stock to flow deflection, if you look at this on the multiple year basis, we kind of have this consistent 0.5 low, which we're about to swing into, which goes along with my thesis. We have not peaked the fuck out yet here for Bitcoin's price. Like, I would like to see at least a 1.5 on the stock to flow detection model before I consider this bull market over. Anyways, it's just my personal opinion. Could you do some short TA on EGLD? EGLD looked like it broke down very similar to Theta, from what I can imagine. It looked really good up until it didn't, and that's one of the crazy. Yeah. So here's what's worrying, right? Or not worrying, but here's what's confusing and what becomes more difficult. These rising supply signatures into the SOS before breakdown, and this massive amount of supply here, those are a little worrying, right? They don't look super healthy. This could very easily be very similar to what we saw in Bitcoin, which is just a distribution. Now, how big of a distributional pattern is, I think, is the more important question than whether it's a distributional pattern or not. Yeah, and we already went over Cardano for you guys as well. So we didn't see us. You're asking about 1 inch. We didn't get anything wrong. I guess, I try to tell you guys this over and over and over again. I don't know how many of you actually do your homework. I'm hoping it's the majority of you, but we've gone over consistently that phase C here is a worrying moment, because phase C in any reaccumulation pattern can very quickly shift to a distributional moment. So you're going to want to keep an eye on doing your own studies and understanding what it is I'm saying. Otherwise, it won't make sense to you, right? So this would have been the spring for 1 inch, but we're gonna wait. We're just gonna wait. Basically, we want to see bigger changes in character for Bitcoin. And if I go back to Bitcoin here, we can kind of go. We've gone over why in the earlier part of this video too, but just in general, this current trading range, we need to see a close above $57,000. If we don't, we're going to probably run up to around 55 on an automatic rally, and then we're going to come back down to around 43. We're going to try to rally above 50, and if we can't, we'll come back down to 30. So very clearly, let me say that again. We will likely automatic rally or automatic reaction up to around 55, 57. Try to close above 57. If we can't, we will come back down to 46. And if we cannot close above 46 or 47, we are coming down to around $30,000 Bitcoin. I feel very confident about that. But one step at a time. I've already closed out some of my profits here. Again, this is my particular strategy. Awesome. I'm going to leave it at that, guys. Just kind of a fairly simple video for you today. How accurate do you think the Wyckoff theory is? It's extraordinarily accurate. You just have to know how to use it and when. The problem is reaccumulation patterns where most of the retail people, which is let's say you're a beginner, the first time you've ever invested. The problem is you fucked up by joining in late. Whereas if you look at this, the longer accumulation pattern, which is really the most valuable, and what we've been going over every day since March 11th is this much, much bigger pattern. And these patterns, these accumulation patterns in the Wyckoff are one of the most reliable and extraordinarily accurate patterns we've ever seen. So this accumulation range here, I was banging on the table bullish this whole fucking time because of this large scale accumulation. But again, as we get up higher, they become, it's not as accurate, but they're more difficult because we're in the middle of the fucking bull market, right? You can see a very quick intermediary distribution. You come back down, you see a reaccumulation, and before you know it, we're on our way to $120,000. So anyways, thank you guys for joining us today. I hope you are enjoying yourselves. If you want to join the private group and you consider yourself to be adventurous and like trying your new things, go down to arcanebear.com, because the disease and the sickness of the new investor comes from over emotional trading, doing stupid things like using leverage, and just really not having a good and healthy place to grow. And that's what we provide in the Arcane Bear. A group to go over. We do peer review charts. You have to like graduate into different areas of conversation. So you can join those in the links down below. And remember, there's no risk there, because if you join, you're not happy, we'll give you a refund, no questions asked. I am looking forward to seeing you guys again shortly. Remember to give us a thumbs up if you like this content. Go to all these social media channels down below. We will be live. And then for those of you that are in the private den, we're just going to start doing shorter little video updates, which you can find usually in trade setups. Just if I don't have time to do a video every day, this is an easier way for me to do that. Anyways, I really appreciate the support. Stay with the Arcane Bear, and we'll see you again on the next episode.